okay? So this is how we look at them. Bollinger Band calculations. 20-period moving average, that's the midline. 20-period simple moving average. 20-period simple moving average plus 2 standard deviation, that's the upper band, okay? 20-period simple moving average minus 2 standard deviation, that's the lower band. So the prices, ideally, 90% of them should be within this range here. Here's where it really gets interesting, and this is why you have to know this, okay? It's a relative indicator on an absolute indicator, a nominal indicator. It's easy. $45 is always higher than $44. Sometimes, when you're maybe in first grade, that's not always the case. But for most of us, we get to a point where we know if a stock is $45, that would be $1 higher than $44. Okay? $100 is always lower than $110. Bollinger Bands are different. $45 actually might be lower than $44. $100 might be higher than $110. Why? Because we're gauging high and low relative to the Bollinger Bands. Relative to that, what's high relative to the Bollinger Bands? What's low relative to the Bollinger Bands? Absolute, just easy. Count from 0 to whatever you are at, and the number that you come to sooner, that's lower, okay? It's that easy. So we're really talking about relative here. What are the prices relative to this Bollinger Band? So we'll look at it this way. Higher highs or higher lows? Absolutely, on an absolute basis, these are higher highs, and these are higher lows. Until finally, there's a break of the trend here. We put in a 20-period moving average in the same chart. That's basically right through the middle. But there is some volatility here. You can see the moving average moves up and down just a little bit. And so the upper Bollinger Band could be constructed this way. Now, look how close this last high is. Remember, higher highs, all of these are higher highs. But look how close this last high is to the upper Bollinger Band. It's about right on the money. The next high, it's higher than the last, okay? But it's lower relative to the Bollinger Band. The next one is higher than the last, so we've got this trend line here of higher highs. On the Bollinger Bands though, they're actually lower highs, lower relative to the upper band. Here, basically right on the money. Here, a little bit below. Here, a lot below. So if you weren't looking at this in the context of Bollinger Bands, but we're instead just looking at it on a price, you would be surprised when this stock broke. But if you look at it relative to these Bollinger Bands, to the upper band, you would see that we've actually had some pretty fair warning that the price was deviating away from these highs. So you get basically an early warning sign that there's a problem with the price. Now, if we look at the lower Bollinger Band and we put it here, again, higher lows. What's happening though? You can see it relative to the first one. The price as well above the lower band. That's a good thing. Okay, next one. The price is closer to the lower band, so it's kind of lower relative to the first one. And then the next, we've got one where it's just right about on the lower band. So this is again one of those situations where the price is doing one thing, but relative to this Bollinger Bands, what would normally seen as higher lows are actually lower lows relative to this lower band. Now, we put them both together and you can see what's happening. The price, even though it's higher, has actually been dropping away for a while. And even though the price here, even though it's higher, has actually been coming in closer to where it was going to break down. So you would have had, again, an early warning sign that this price was going to break down. If you had been looking at this in terms of Bollinger Bands, let's take a look at a couple charts. Now, here, an old chart of Google, you can see this stock trending down. Where is the first higher high? You've got a look and say there. This is all within the trend here, okay? Downtrend. And then finally, we get higher. We buy the pullback here and then we ride this on the victory. But instead, If you slap some Bollinger Bands here, okay, what you will see is relative to the 20-period moving average. It had been banging against the 20-period here. This was your higher highs, right here. Even though it's still confirmed to this trend line, this gave you the early indication that this stock was turning. It gave you an early indication that this closed above the 20-period moving average. Well, that was different. Now, you get the pullback on the first sign that this stock is moving higher. That's when you buy the stock. And while I'm here, look at how this was behaving relative to the lower band. Stock had been basically walking down along the lower band, just staying right inside but on the lower end of it. Suddenly, the price starts to trade above the lower band. Finally, on this pullback, the stock was noticeably above the lower band. A totally different characteristic that we had back here. So, this is really how you look at these Bollinger Bands. By the way, just look and see what's happening here. The upper band, well, above these prices is the lower Bollinger Band. That was tagged there, so now we're right in between. So let's just kind of do a little quick theoretical trade here. You know, when you buy this stock, it's not when it just breaks out above this level, this last resistance level. But when it actually breaks out above the upper band, that's an indication that, once again, the price is changing. The price action is changing, okay? Why? Well, because the last time the stock hit the upper band and actually exceeded, it was here. Ever since then, it's never come and threatened the upper band. So, when the stock actually pushes above the band again, that gives you an indication that the trend is continuing. Now, let's look at the lows. Here's a chart of floor, where the higher lows, the first higher low, well, that would be here, wouldn't it? Because we can see low, lower low still. Well, you know where I'm going with this. Now we put on these Bollinger Bands and you can see that this was actually a higher low, a higher relative low. An absolute low, nominal low, price low. Certainly, this was a lower price. But relative to the Bollinger Bands, this was contained by the lower Bollinger Band. This was not your indication. This higher relative low was your indication. This downtrend in floor ending and it was time to start going long. Close your shorts, start to go long. If you don't do that, you're going to lose your shorts or at least your shirt. What you do with your shorts, I don't really care. So let's look and see how we could have traded this back in the, the early days of the new millennium here when the market was really in the toilet. I made these trades, okay, like a lot of people did, if they knew how to use these Bollinger Bands. You can see the 3 big low here, okay, just simple price action. Now, let's look at them with Bollinger Bands. We're zooming in here a little bit. Look at these 3 lows relative to the lower bands. Well, below the lower band, here a lower absolute or price low, but a higher low relative to these Bollinger Bands. Now, here, well, it came back down below the lower band, right? But we got a higher absolute low or price low than here. So as you can see, you can use these bands. You can look at them and find out some things about the price movement of the stock or an index or whatever that you wouldn't be able to see if you just looked at the price itself. So what I'm suggesting is that you use these Bollinger Bands in conjunction with just looking at the price movement. If you can use both of these together, you're going to use to have a powerful trading tool, a very powerful trading tool. I promise you, you're going to have a better sense of which direction price is going before the other guy. And it's going to help you get into trades earlier and stay in trades longer until it's finally time to get out. And so now we zoom back out and we look and see again what's the bottom was like. Lower relative low, higher relative low, I'd say higher still or at least an absolute price low right here. And then you see what happens after this. So when you see these big massive bottoms, look at them in the context of Bollinger Bands. I'll end with this, okay? I'll take you to a chart of Apple. Everybody's favorite stock that they love to love at one point and they love to hate. So what are we doing here? Alright, this video I'm doing at the end of the day on Friday, March 15th. I'm looking here and you see these lows. Look, well, below the Bollinger Band, a lower low still, absolutely in relation to prices. Yes, in relation to the Bollinger Bands. Not quite so much, but I'm getting that picky. Still extended below the lower band. So I would say this low again. I could make a case for this being higher. Higher low relative to the lower Bollinger Band. But come on, that's results-oriented analysis. It stinks. It's below the lower band, this more so, but when we look at the weekly chart, you get a better sense of what's happening. Now, look at these. I'll zoom in here. By the way, this is in my head and shoulder neckline that I've been talking about for quite a while. Like since it's first started forming this thing, but look at the last three lows here. Look at the low relative to the lower Bollinger Band. Well, below that level basically established the neckline.